In a world where new ideas and chances come together, we have one stock that is ready for an amazing trip. This isn't just any stock, it's an AI growth stock that's about to split and fly. Shares of Tesla split. As you may have heard, we're going to go into great detail about the ideas that could cause a huge rise, but before we do, don't forget to hit the like button and subscribe to Tesla Stock News. Join us today as we look at the AI frontier through the eyes of famous fund manager Cathie Wood. Tesla buyers are going to get a lot of money in the next few years. Tesla, whose stock code is TSLA and whose price has dropped by 1.57%, did a 5-for-1 stock split in August 2020 and then a 3-for-1 stock split in August 2022. There was an amazing rise in the stock price in a very short amount of time, as shown by these splits in just over 4 years. The big question is whether or not this prediction is based on reality. Let's turn our attention to Tesla. The well-known electric car company, we learn more about its impressive accomplishments and bright future. Tesla is the leader in the global battery electric vehicle market with an impressive 20% of BEV sales through July. This puts Tesla 5 percentage points ahead of its closest competitor. But Tesla's dominance isn't just limited to BEV sales, it's also one of the most profitable companies in the automotive industry as a whole, as shown by the fact that it had the highest operating margin among high-volume automakers last year, which CEO Elon Musk credited to the company's superior manufacturing technology for investors. The chance of continuing to make money and maybe even making more is on the horizon is based on 3 strong arguments. First, Caron Energy Research Advisors confirmed that Tesla can make battery packs, which are the most expensive part of an electric vehicle, for less per kilowatt hour than any of its automotive competitors. Analysts believe that this competitive advantage will last for the next 10 years. Second, Tesla has big plans for its Gigafactory in Mexico, which is currently being built. This facility will use a new way of making things that could cut costs by 50% and make the factory much smaller. 40% of Tesla's vision. Lastly, Elon Musk, Tesla's visionary CEO, wants the company to make an average profit margin of almost 70%. This big goal comes from the fact that full self-driving software and more Robotaxi services are going to be an important part of Tesla's business plan soon. If they are able to reach their goal, it will be a huge improvement from the company's current 21.5% gross profit margin. Tesla has changed a lot since it became an AI company. It used to be known for making great electric cars, but now it's getting ready to become a big name in AI software and services, with its full self-driving platform being the key to this change. Tesla sees 3 different ways to make money off of its self-driving technology. First, it plans to offer FSD payments to drivers, which would give them access to cutting-edge self-driving features. Second, Tesla wants to license its FSD software to other automakers, which will give it a bigger impact in the auto industry. Third, the company has big plans to use its FSD software to power a fleet of Robotaxis, which is a very exciting idea in the field of self-driving cars. Tesla is in the lead with many FSD features turned on. When it comes to cars that are already on the road, the company collects more data than any other car maker. Cathie Wood, autonomous driving, a well-known investor, says that Tesla has more data on autonomous driving than all of its possible competitors put together. This data advantage means that Tesla has better technology for autonomous driving, since the effectiveness of AI models is directly related to the amount of training data they have. Tesla's strategic positioning is very important, as the company not only secures a dominant position in the thriving electric vehicle market, but also jumps into the rapidly growing autonomous vehicle industry. Tesla's continued leadership in the electric vehicle market is very important. This market is expected to grow at a staggering 23% per year until it reaches a staggering $1.7 trillion by the year 2032. With Tesla at the forefront thanks to its innovative EV technology and wide adoption, the company is poised to capture a substantial share of this monumental market. This not only means substantial revenue, but it also solidifies Tesla's position as a key player in shaping the future of sustainable autonomous vehicle market transportation. However, Tesla's goals go beyond just making conventional electric vehicles. The company's move into the market for self-driving cars is just as impressive. The extraordinary yearly growth rate for this segment is expected to reach an amazing 35% by 2032. The market for self-driving cars is expected to be worth an amazing $2.4 trillion by 2024. Tesla's advanced driver assist features and its goal of fully automated driving with technology like full autonomous driving put it right in the middle of this market that is changing quickly as autonomous technology continues to improve and grow. Tesla is in a great situation to change the future of transportation. Also, Tesla's bold decision to make a lot of Robotaxis is a big deal. The adventure plan for 2024 opens up a whole new world of possibilities. This strategic move lets Tesla get into a growing market segment that ARK Invest estimates will be worth an amazing $9 trillion by 2030. The idea of robots in which self-driving cars act as on-demand taxis could change the way people get around cities and transportation services around the world by joining this lucrative market. Tesla is not only set to make a lot of money, but it is also putting itself in the lead to change the way people travel and use public transportation. Tesla's multifaceted approach shows how dedicated the company is to shaping the future of transportation and artificial intelligence. Building on R's compelling valuation model for Tesla, it's clear that their approach gives a full picture of the possible paths the company could take, using a sophisticated mnemonic. Simulation of Carlos Air Invest looks at an amazing 1 million different possible futures, all of which happen in the year 2027. These futures can be summed up into three main results: the simple case, the bull case, and the base case in this very negative situation. Let's look at the worst case scenario first. This prediction says that Tesla stock will be worth $1,400 per share in 2027, which is a big 438% increase from where it is now. Mark thinks that Tesla will make about $769 billion in 2027, mostly from electric cars. Continue to be the main source of income, bringing in 46% of all revenue. Tesla's yearly revenue growth rate of 60% in this segment shows that the company can keep a strong footing in the market for its electric cars, having a market position despite problems. In addition to Robotaxi services, which are expected to bring in 34% of revenue, are very important in this situation, which shows how important Tesla's self-driving cars are becoming. The last 20% of revenue comes from a variety of places, such as insurance and energy storage. Bringing attention to Tesla's multiple sources of income, in the base case, Tesla's stock price soars to $2,000 per share in 2027, representing a remarkable 669% upside potential. Mark's projections here indicate that Tesla will reach a significant revenue milestone of $1 trillion in 2027, with electric vehicles continuing to be the main source of revenue, accounting for 47% of the total. This shows that Tesla has continued to grow in the electric car market thanks to its new technologies and growing product. For example, its Robotaxi services have come a long way and now make up over 44% of its revenue. The company's strong yearly revenue growth rate of 69% shows how well it can use its autonomous capabilities to shake up the transportation industry. The last 9% of revenue comes from different sources, which shows how strategically diversified Tesla is. Finally, in the best case scenario, Tesla's stock price skyrockets to an unbelievable $2,500 per share in 2027, giving investors an unheard of 88% upside potential. ARK Invest's predictions for this scenario show Tesla reaching a revenue peak of $1.2 trillion in 2027, which shows the company's incredible growth trajectory. Electric vehicles and Robotaxi services jointly contribute a lion's share of revenue, accounting for 48%, and 49%. Tesla has a strong marketplace in both the electric vehicle and self-driving car sectors. The company's impressive annual revenue growth rate of 76% shows how well it can use its cutting-edge technology and capitalize on new trends. The last 3% of revenue comes from different sources, showing that Tesla can find and make money from a wide range of areas. While each of these three scenarios has a different level of optimism, they all paint a complex picture of Tesla's future. They show how quickly the electric vehicle and self-driving car markets are changing, as well as Tesla's ability to thrive in these environments. Investors thinking about putting money into Tesla should compare these scenarios to their risk tolerance and long-term investment goals, keeping in mind that the company's path will still depend on innovation, market dynamics, and execution. In conclusion, so the careful valuation model gives investors a range of possible outcomes that show Tesla's impressive growth possibilities in a lot of different situations. These predictions show that the company has a multifaceted strategy that includes electric cars, self-driving technology, and other new ways to make money. Even more strong belief in Tesla's bright future. As we think about whether Tesla stock is a good investment, it's clear that Cathie Wood and Air Invest's comprehensive valuation models give us useful information. However, when we look more closely, the assumptions that all three scenarios are based on do seem rather lofty. The idea that Tesla shareholders could get returns running from $438 per share to an amazing 80% by 2027 might seem like a pipe dream, but there is a strong case to be made for it. Tesla might change direction and move into full self-driving software, and robots. Taxi services are a powerful force that could change the way people travel and move around. After industries, if this change is made successfully, it could open up new growth possibilities for the company that have never been seen before. It's also worth noting that Tesla's current valuation, with shares trading at 9.6 times sales, is lower than its 5-year average of 11.2 times sales. This means that the stock may be undervalued right now, which is a good deal for investors. However, it's important to remember the risks that come with investing in a company that is known for innovation and instability. If an investor is patient and willing to take some calculated risks, they might want to start with a small investment in this growth-oriented stock. Ultimately, the choice to invest in Tesla depends on how much risk an investor is willing to take. Horizon and faith in the company's ability to make its big transition successfully. So, that's it for today. We've been on a journey through the many sides of Tesla, from its amazing growth in the electric vehicle market to its big plans in the areas of AI and self-driving cars. Besides that, we've also looked into the details of ARK Invest valuation models, which show a range of possible results for Tesla's future. Before we end, let's think about a few important questions. Could Tesla reach its lofty growth goals, or are they too optimistic? How will Tesla's move into AI software and Robotaxi services change the transportation industry? What role will innovation and new technologies play in shaping Tesla's future? If you found this movie interesting, please like and share it. Also, sign up for Tesla Stock News to get more news. Thanks for watching, and see you next time.